When inflation is rising, investors have long relied upon real estate to protect their portfolios. However, the current period of high inflation makes real estate even more important than usual. Here's why. Even though our economy shows some signs of recovery, the current high demand versus short supply continues to plague growth, and no one can predict when supply chains will fully recover. As an investor, a wise way to avoid negative impact on your portfolio is to include assets that are considered a hedge. A hedge is intended as a just-in-case option that can potentially minimize losses during periods of inflation. Asset classes that are historically recognized as good hedges against inflation include some types of bonds, gold, commodities, and real estate. Here are 3 reasons why real estate is typically considered to be a good hedge against inflation. Number 1. Property values can potentially rise while fixed-rate mortgages remain unchanged. During periods of inflation, a home's price generally rises over time, and the loan-to-value ratio of mortgage debt falls. As a result, the equity on the property increases, while your fixed-rate mortgage payments remain the same. Number 2. Short-term lease rental properties can benefit from inflation. When a real estate investor is able to raise rents while keeping the mortgage rate the same, this creates an opportunity for increased income potential. The more short-term lease rental properties, the more opportunities you have. Number 3. Property values over time historically tend to remain on a steady upward curve. This can also provide a potential recurring income for real estate investors and can maintain the pace or even exceed the inflation rate in terms of appreciation. One of the best ways an investor can utilize real estate as a hedge is to invest in a multifamily property, such as an apartment complex. Typically, with a multifamily property, the tenants renew their leases individually once a year, and the more units a building has, the more frequently the investor is granted ample opportunities to adjust the rent. Plus, multifamily properties are always high in demand, especially when housing prices soar. Not all investors can or even want to own and manage an investment property themselves. In these cases, investors can still benefit from using real estate as a hedge by considering real estate investment trusts, or REITs, institutional real estate funds, and Delaware statutory trusts that are also known as DSTs. Real estate investing is often recognized as a path toward potential savings preservations in an inflationary and unpredictable economy. Regardless of the economic situation, housing may continue to be in high demand, and this means it will have the potential for the original investment to grow into something more substantial down the road. At Perch Wealth, our team would be happy to discuss our investment model and opportunities with prospective investors. We're here to help you strive to achieve your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.